Hey investors, Nordic American Tankers just released their second quarterly earnings report today, and with an hour left in the trading market, it feels like investors are not reacting or showing no reactions to it. The stock is still around $4.45, down about 1%. So I'm here today to give you an analysis on the numbers and guidance and give you a grade rating for its entire report. So, right now, the stock is valued at around $655 million. And going into this quarter, analysis have a average earnings estimate of 0.28, so 28 cents a share. And the revenue estimates are about $94 million. Now, looking at the quarterly report, first off, this sentence is very, very philosophical. Sometimes a chart is worth 1,000 words. Here are two charts that show the most recent performance of NAT by net income and dividend per share. So this is just what the company released today. The strategy of NAT continues to pay off. Okay, well, this is very optimistic to see. So the most important numbers and things I highlighted are very important to look at. So for this quarter, the net income was actually $49 million, a 24% improvement from the previous quarter of $39.5 million. And that's very, very good to hear, knowing that during this coronavirus time, they have been taking advantage of the situation and really improving its revenue. And with the low oil price, it's a really big prime time for them to earn money. Now we're going to talk about its dividend. The dividend declared is actually 20 cents per share, and it's payable on September 4th of next month. So if you're a shareholder as of this month's 28th, then you will be able to earn 20 cents per share for your dividend, which is a lot of great dividend money if you value this as a dividend stock. The next update is that they have 23 Suezmax tankers. So this is their main ship that loads and stores oil and transports oil as well. And they earn about $48,400 per day per ship. Now, that seems like a lot of money, and it actually is. But it's also important to look at the daily expenses of managing each ship. And I've highlighted that they expressed it's about $8,000 per day per ship. So actually, the net income per ship is around $40,000. And going into the third quarter, we see that 2020 will be a good year for this company as well as 2021. Very forward-looking and very optimistic. It's good to see that this company, even though it's a very trendy stock, is not always gonna have great revenue performance. But knowing that for 2 consecutive years, this is what we're going to be expecting. It's very consistent. It's reassuring to know that this is building more consistent growth. We have a busy dry docking schedule for 2020. At the end of September, we expect to have completed all of our 10 scheduled dry docking for 2020. So if you don't know what dry docking is, it's basically a ship or a vessel near a dock, and then you basically load cargo and loading in and out cargo. So it seems like they are very busy despite them not completely relying on this virus period on storing oil and stuff. So they have other things to help them earn more revenue. So this is good to see that they have a busy schedule ahead, and this isn't just a 1 or 2 quarter high revenue growth. Next thing we're going to look at is that a comparison of second quarter last year. It had about a net loss of $15 million, or a loss of 11 cents per share. Now compared to this quarter, it's a dramatic improvement. Look at that, $49 million or 33 cents per share. That is pretty big. Now 33 cents per share, let's go back to what analysts were expecting, 28 cents. So that's a good beat right there. Look, even the highest estimate was 29 cents. a share. So this is really great beat for them. Good to see. Now we're gonna look at the time chart equivalent. Basically, this is how much money they're earning from the ships per day. Now we're gonna go starting from last year, around 26,000, and then it drops all the way down. And then starting at the beginning of this year, it's risen up a lot, and that's just because of the oil demand and oil supply. And now you would like to see this number continually to stay around this price, because this is very, very great growth. But obviously, this is not what you should be expecting few years or 3 years down the road, when oil is becoming less of a wanted commodity. Next thing we're gonna look at is their dividend. When you think about this company, cash dividend is basically the first thing you'll think of. It's a top priority of the company. They announced that they are giving out 20 cents per share, and they've been giving out dividends since like 1995 or something, like for 20 straight years. So they're very consistent with it. Even they say that their dividend is always a reflection of their earnings. A strong tanker market means stronger dividends for investors, and so it feels like dividends almost at like an all-time high right now, 20 cents per share. That's about like 10% dividend yield, and I don't think you ever find that in like other stocks. Now, their outlook on the world economy: a low oil price is good for the world economy and works as a stimulus for recovery after the virus lockdowns. We see encouraging signals of improved Asian economies, boding well for the world economy and tanker markets going forward. All right, so as this oil market continues to go on their recovery stage, it also helps out the oil tankers in a way, because they're helping them store oil. And if this trend continues where there's a lot more oil supplies and lower demand, this helps the company even more. Now, during the second quarter of this year, the 3 conventional Suezmax ships or vessels were delivered from the shipyard. For the remainder of this year, we expect to see a total of 13 additions to the Suez fleet, which is basically saying we're adding more ships to it. This is very good to see. We currently see 22 conventional Suezmax tankers scheduled for delivery next year, in the next 2 years. So this is a company that's continually expanding upon the ships. They are known for the Suezmax ships. That's what they use their ships mainly to store oil and transport oil. And with newer ships and more ships, you can see that they're preparing for more oil storage and a growth in their business. They wouldn't do this if their business was struggling, letting you guys know. The supply of tanker tonnage is inelastic in the short term. When there are too many ships in an area, rates go down. When there is scarcity of ships, rates tend to go up. And that's what we've been seeing in the past few months, I think you would say. How the oil tankers have been going up a lot during the April and May times, and then afterwards it's slowly dragging down. And so if you look at the tanker market that releases weekly, look at this. In May and April is when it skyrocketed, and this is not maintainable, so it's got to drop down. And because of this, May, June, and July's performance, and even August now, that's what caused the stock to drop a lot more. But you would need to see a recovery, maybe back to around the mid levels right here, in order to see even bigger growth in the company. Because now once dropping back to here, it's hard for them to grow. All right, next thing, let's look at their strategy going forward, trying to expand and maintain top quality ships in their industry, and also building closer customer relationships with the major oil companies. All right, that's nothing new. That's something that you should be always doing. A strong balance sheet combined with economies of scale, giving a low cash break-even level, letting the company distribute dividends to shareholders. All right, this strategy is positive in a strong tanker market. In an improved market, higher dividends can be expected. Right. And that's why dividend is almost at like an all-time high right now. Now, other than that, we're going to look at their balance sheet. So, this quarter, they've raised a lot more money, an increase of $112,000 in cash compared to last year when it's about $42,000. The total assets stayed the same, and it feels like they just withdrew some. They just had a loss of inventory, and you know what? Most importantly, is just them building up cash, because cash allows you flexibility to do anything. We're gonna take a look at the liabilities. $29,000 in dividend payable to us, and then their portion of the long-term debt, making their total current liabilities about $101,000. Big increase from last year, but that's okay because they're in a very strong situation. They can actually use all the cash to pay off the current liabilities today. And then their non-current liabilities, so long-term debt, they've actually decreased it. So that's good to know that, you know what, this company is still in a very strong financial situation, and that they are not going to be strangled by some like monetary decision and all that because of paying the debt. So overall, good balance sheet. Now taking a look at the revenue, like as I mentioned, 94 million right here, right? That's what analysts expected. So here's a breakdown of it. They actually earned about 122,000 this quarter in revenue, and that's less. That's about like 10% less than what they earned last month. But their expenses are significantly lower compared to last quarter, and that's how they're able to have this net revenue much higher than last quarter. You'd like to see this revenue become even better than last quarter, but you know what? It's hard to top last quarter because of March and April. That was the skyrocket times of this tanker market. You see here, I don't think we'll get back to those levels anytime soon, but maybe halfway, maintaining halfway is just the most important thing. All right, so as of that, right now the market still showing no reaction to it. Overall, I give this quarterly report a B grade. It's beat some estimates. It missed out a little bit on the revenue, but still it's very positive, and they're showing signs that this company is going to continually to grow and not just stopping in this quarter. I would give it a worse grade if they did not have any like forward-looking growth strategies, but it seems like they do have some great ones coming. They outlined their plans, and this is a stock that I will continue to hold. I mean, ever since I bought this around like $6 around April, I think I bought into the hype. I made a bit of a mistake on that, but I've been buying and averaging down every time it goes down, and it seems like the moment I bought it, this stock has done nothing except going down and down, which sucks. But you know what, they do pay out some good dividends, and I'm just gonna keep on holding it. Look at that, 12% dividend yield. You're not gonna find that in any other company. I would continue to hold this for another few quarters or maybe a year and see how well this stock will bounce back. I'm not selling out until it at least reaches back to my own original purchase price, around $6, and I think it will get there sometime in the next year. Other than that, if you are an investor of this company or other oil tanker ships, let me know your comments, and I'll be very interested in watching it and reading it. So as of that, thank you very much. Have a great day.